It's Friday the 22nd, I'm FX Plu and this is CurrencyTransfer.com's market update. To round the week off, we have the headlines of August rate hike may be back on the table as MPC votes 6-3, an appointment to the Italian cabinet has spooked the euro, and weak manufacturing data from the US hits the dollar. So in the UK, Andy Haldane, the chief economist of the Bank of England, he joined the two usual suspects in voting for a UK rate hike yesterday. The 6-3 vote in favour of no change, but provided a slight boost to the chance of an August rate hike. And this has supported sterling, helped it recover from a 131 low against the dollar to see cable touch 132.90 this morning. We also saw a weak high for sterling euro, touching 114.60. So Haldane's vote was driven by wage inflation primarily. He believes that the deal struck in the new round of pay negotiation will push inflation higher. Now, under more normal circumstances, this could well have persuaded other members of the MPC to follow his vote and change their opinion on when the rate hike should come through. However, with all the headwinds facing the UK economy at the moment, a preemptive move is barely justified. So 6-3 were the scores on the doors, and we'll keep an eye on that next month to see how the vote develops. Meanwhile, in the Eurozone, Italian Prime Minister Conte has named two Eurosceptics to head up the finance committees that will drive through the tax cuts and the welfare increases that he pledged as part of his election policy. Italy's debt to GDP ratio is now running at about 132%, and these policy changes will only add to the country's debt burden. Concerns ahead for the EU, no doubt. And indeed, concerns over the national policies of the new government resurfaced in the market yesterday, and euro-dollar touched a new 2018 low of 115.08. It did recover later in the day on the back of poor US data to touch 116. But next week we have Eurozone inflation data. This may show a slight increase as the the effect of the weaker euro trickles down and makes exports more expensive. But forecast for the CPI at the moment is a slight increase to 2.3%. And so yes, yesterday we saw about $1 profit taking before the weekend. Triggered by the Philly Fed manufacturing data, this was weaker than expected. A slight pullback had been forecast, but the data actually fell from 34.4 last month down to 19.9. The dollar index had touched a new 2018 high of 95.53 as the Italian political concerns came through, but this data reversed that move and the index closed at 94.88. Have a great weekend. I'll see you next week and look forward to keeping you posted in the markets. All the best.